It is a bloodbath in equities today as the sell-off in tech continues. We'll be discussing that, the latest in the crypto market, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, hit that like button. Remember to subscribe to the channel. Jesus. And that nothing Kevin or I say is financial advice. Kev, we got some Tesla and Google earnings after the close yesterday, and they are not making people feel optimistic about the current state of AI. Maybe this is the beginning of the bubble bursting on the AI industry.
Yeah, I mean, what can be said about the price action that we're seeing today, right? Tesla pretty much just shat the bed in terms of the earnings. I think a lot of people were expecting more out of them. But again, whose fault is that? Probably people who were expecting more out of them, right? We're this far in the cycle. We know that it's hard to finance some of these vehicles now because debt's really hard. It's not easily made available to people. So what do you expect?
I mean, we've seen Tesla slashing prices on their cars like crazy. We've seen the statistics that electric vehicles are not gaining the popularity that we would expect them to, or that people are hoping they would. There's more competition in that area. Tesla, I mean, their margins are getting getting much thinner. They're selling less. Like, people are just in a tight situation. So I was like, this shouldn't be surprising. You can only beat on earnings for so long. Like, at some point, you're going to have a quarter or two or three where you're coming in expectation as you're trying to figure stuff out and pivot. So it's we saw it with Google too, right? Like, they were $1 billion above what was expected as far as like R&D and everything else to help with AI. And so it's really kind of like put up or shut up time for a lot of these companies. Like, there's been for so long promises of what AI could do, but not much has been monetized of it. And so now it's like, okay, is this actually reality, or is it just a pipe dream?
You haven't really missed. You can't miss at this point, especially the market being at all-time highs and such uncertainty in the world and the financial markets too. One miss is just going to drag everything down, and that's what we're seeing here for your company. It's a really tough place to be one of these companies if the consumer is not strong and you're expected to continue to your output is supposed to be and forward guidance is supposed to be, we're going to keep doing better next quarter and the next quarter. That's why it's putting a little bit of pressure on Nvidia, I think, here. And maybe that's why Jensen might be selling some stock, taking some profit here, because maybe he knows the forward guidance isn't what, people might be expecting. Also know, forward guidance for Tesla, I don't even think they put out forward guidance, right? Just because things are so bad. So, we might be seeing that across the board for the tech stocks. The NASDAQ's pretty much telling us that GG in the chat's game over. And I'm pretty sure that might be something that we see with some of the other ones too, the other indexes. But for right now, we can see that tech was extremely heavy. It's overly heavy. It's starting to fail a little bit in terms of, price action. And, this market's heavily wound around tech right now. So I would be kind of cautious, looking at some of these. I know Jim Cramer's already saying, you guys are idiots for not buying Tesla and Google. He said that this morning, pretty much saying that there's so much to look forward to for Tesla and Google. It's like, man, there wasn't a nail in the coffin. Well, that's it right there.
Yeah, looking at Nvidia's chart, down almost 18% since its local high on June 20th. So in a little over a month, about 35 days, we've seen an 18% pull down there. Like, and there's still plenty more room to go, but
oh yeah, right there.
The question you start asking with some of the AI chip makers is like, okay, at what point does that become a buy? Like, we're seeing more and more companies continuing to forge ahead, trying to make their own chips that are going to compete. Whether they can or not is a huge thing for Nvidia, but for right now, that sentiment is kind of hurting them a little bit. Plus the fact that, like, we still haven't seen all these companies, like I said, who've committed a ton of resources to AI actually deliver anything with it.
Yeah, I mean, Shit. I mean, if CrowdStrike wasn't even, the slightest, indication that there might be some type of tech bubble in terms of the AI world, maybe there's another one that's around the corner that we just don't know about, right? We really need AI to put up or shut up right now. It's, I think people are just, on a hopium spree, hoping these things are going to continue to push up. I rather be a little bit more rational here. I'm looking at the technical analysis because this, like I said, the reason I shorted Nvidia is because it actually started trading technically, and so I was buying shorts right around here, around 130 to like 133 ish. And then obviously look where we are now. We're at 115 or so. I think it has room to go a little bit lower. But again, look at the structure that's here. There is no support from 906 to 106. So I mean, if this doesn't hold, then you're looking at another from this area where I think it probably will end up touching is a good, 10% or so drop from there. So there's things that you could be looking at, and you can see where some of this money is flowing out of. Like we said a lot of it was flowing out of tech, and it was going into some of the smaller caps. Maybe that's why the Russell isn't having nearly as bad of a day as, say, something like the S&P that's down 2.11%, or the Nasdaq that's down almost 3.5% today and lost a 50 moving average. Right? I mean, even the Dow, small caps, some of the utility stocks are in here. Still down 1.05%, and we talked about hitting that 41.5 level. We did a pretty good job getting close to it. Didn't get to it 100%, but now we have to question ourselves in the Dow and some of these other ones. It's like, is this a correction or is this a crash? If it's a correction, then we're probably going to be moving to the upside at some point. If it's a crash, then we're probably going to be correcting to the downside a lot further and a lot faster than most people are probably expecting. So, yeah, I mean, it's just really interesting to see that we're seeing this much price action before GDP, before PCE in the middle of the week, and there's no way of stopping this market. So if bad news does come out during the week, as opposed to the weekends, as it has been for the past, year or so, we can see that this market definitely can move in either direction.
NASDAQ now down about 3.5% on the day. I think a lot of what's weighing on that too is next week we have earnings on Wednesday for Meta and on Thursday for both Apple and Amazon. And it's still another like 5 weeks until we get Nvidia earnings for Q2. So I think there's a lot of people trying to get ahead of what they think are going to be misses on earnings for those other major tech companies next week. And that is just pulling this market down in a massive way. Let's talk crypto for a little bit. Yesterday was the first day of the ETH ETF. We saw inflows over net of over 100 million, right? That's the correct number. And so, solid right there, but crypto is a little heavy at the moment right here. We're seeing pullbacks pretty much across the board, except for Solana, which is actually holding up rather well right now. But meanwhile, ETH is down below 3,400, Bitcoin under 66K. Seeing things pretty overbought right now, so maybe that continues to weigh on it for a little bit. We have the Bitcoin conference in Nashville going on right now. Trump, I believe, speaking tomorrow. There's a rumor that Harris was going to be there as well, but now it sounds like she has decided not to go forward with that. So whatever. Anything else you want to talk about in TradFi before we got into the crypto market?
I mean, just go to crypto and then we'll rotate back into treasuries, because not the most exciting thing, but at the same time, we are seeing some movements there. But I think it does play into correlation with TradFi and crypto, how we're seeing things right now. So in my opinion, I think we're probably going to see some very negative price action coming up soon into September, October. But I think that could last from all of August into September. And then I do expect us to get some type of dead cat bounce in the market. I just don't necessarily know when that comes. Some people think it's going to come next week after this 5 waves have been done for in TradFi. I'm not convinced. I think anything could really happen here. I'm not going to time the market, so I'd rather just hold my positions and just say, okay, 6 months out, maybe that's when I start to look at maybe taking profit if it does go to that level. But when I'm looking at here with crypto, is we have 5 waves here in this move to the upside, which really is confusing to me, because we had 5 waves down. So I expected 3 waves corrective and then 5 waves down from there. So what I'm thinking is, and House also sent me some stuff from Arkham, and we're seeing tons of stuff on Whale Watcher saying that's, Tether printed quietly $1 billion. And so I think that's what we saw a lot of money flow into. And there's kind of like this protection wall in crypto right now that we're looking at, where it just will not go below the 60,000. They really don't want it to go above there. So once you got blow it. They pumped a ton of money into the market. People are getting excited. Now you're getting ETF news. There's not much more in terms of news that you can really get unless you say you want to give a Solana ETF coming in the future. Maybe that's possible, but I just want to show everyone once again what happens at these events. Coinbase IPO, Bitcoin futures ETF. Here you had the Bitcoin ETF, and now here's the ETH ETF. I would expect it to have gone up here, and I still am open to the fact that we could see an all-time high for Bitcoin, 75K or so. That would trap a lot of people, find some resistance right around there, and then that might be the top of the market. And maybe we see something very similar to a correction like April of 2021, where you go from 64K all the way down to 47K before you finally bottom out somewhere here in July around 30,000. I'm not saying those levels specifically for this on this side. I'm just saying those percentages probably will line up if we're looking at history in terms of some of these major market products that are released for crypto. But I think a lot of this market is very interconnected. I think that TradFi and crypto are more interconnected and are afraid to drop, if anything, as opposed to, say, sorry, I just lost my train of thought. I'm battling a cold right now. But I think that there's just definitely people who don't want this market to drop. And I think that's mainly distribution that we're waiting to see. So I think a lot of people do want to get out of it, like maybe the 75K level, see if the market can push it up there. Maybe USDT helps in that regard. But I wouldn't be surprised if there is more complications around this level of 75K. I wouldn't even be surprised if we have complications right here and we take a pretty good dump. It really depends on when the money and the liquidity kind of runs out. And the more tether that you pump into the system that's pushing the price up, that's chaotic too, because that means that there's a lot less money that's going to be there liquid for people when they do pull out. So this is going to be a really interesting play. I'm open to it pushing up to all-time highs. I'm also open to it dumping from here. The ETH ETF, I don't think is going to be as strong as the Bitcoin ETF. I don't think you're going to see ETH hit all-time highs. A lot of people are expecting it. It's possible, but we really just have to wait and see this point, right? Because the ETH all-time highs over here around 48.65, currently sitting at 33.92. So let's see, 48. You're putting up. You're expecting the market to jump from where it currently is about 43.86%. Kind of a tall order, just in my opinion. It might be something that you won't see maybe that great of gains, but it's possible we could see something like, 18%. I wouldn't be upset with an 18% move to the upside. I think that's fair. But, we're just going to have to wait and see. It took Bitcoin a while before it hit all-time highs of like 72 or something like that. Or what is it, 73.5 when the ETF went live. So maybe it takes a few weeks before ETH pumps, but I do think that the market is also in a very different place where there's less liquidity out there that's willing to be risky as opposed to what there was at the beginning of 2024. So maybe I'm wrong, just something we're gonna have to keep in mind. And before we say anything else, a lot of people are saying that alts are looking pretty good. I don't know if that's true. I have absolutely no idea. I think that whenever we get a death cross or about to get one, we always get a pump out of it. So, I mean, my structure here onto the side could even be wrong too. We could just absolutely dump from here. But usually we get a really good pump to the upside and then slowly it fades back and then we get the death cross following it. And I think once we get the death cross, it's probably going to be more of a downward push for alts. And maybe you see Bitcoin and the other ones dominance rise, but I think it's more going to be Bitcoin dominance and USDT dominance that are the ones that will remain somewhat strong as opposed to alt dominance from here on out.
All right. Anything else there? I mean, it's pretty. I don't know which way. I'm terrible at this day trading stuff, right? So I don't really care what happens today or tomorrow. Like I'm looking out long term here, and I still like what I'm seeing, but yeah, it's going to be tough right now. We did some other economic data. I want to talk about the housing market for a minute because we once again saw existing home sales come in under expectation. This time on a 12-month basis, 3.89 million, which is below the expectation of 3.95 and the previous reading of 4.11. And as I look at houses, I'm seeing it reflected there of prices are coming down. Things are on the market for longer. People are getting desperate. More as values go down, more people are going to be underwater and not be able to refi. Like all of these things are setting up, and it is a a really tough time if you're trying to, whether you're trying to upgrade or downsize. I mean, we have seen some increase in number of houses for sale, but there's still a ton. You got all the baby boomers out there who why would they sell their house right now, right? Like that wouldn't make any sense. So it's a really tough time in the housing market, and I just wonder how soon people's biggest asset continues to lose value, what that's going to do to the consumer as well.
Oh yeah, your neighbor's gonna undercut you. I mean, it's going to be a cutthroat market for people that are trying to get out, right? Let's take this for example. Bank of Canada today cut by 25 basis points. We know that the Bank of Japan is going to raise probably at the next meeting. The reason why Bank of Canada cut, because unemployment and bankruptcies are on the rise. So if people have no jobs and all their wealth is tied up in one asset, say a house, where the majority of their wealth is tied up in one asset, if they try and sell and everyone's trying to sell at the same time because more people are losing their jobs, you're going to see a fire sale in the housing market and it's going to absolutely spiral out of control. I think people don't understand how fast that could actually happen too, right? You saw that the BLS data from Q4, it was said that 647,000 jobs were added, but then we got the revision, it was 344,000 jobs. So I think the unemployment data
on that one.
Yeah, and I forget who posted on Twitter. I think I retweeted actually on my Twitter account. But there's a good chance that maybe there's more people that are unemployed than we possibly know, and we won't know necessarily until the dust is kind of settled in terms of these fire sales and seeing how people are actually performing. But there's a lot of pressure on these institutions, on people right now, and the longer that we keep rates elevated too here in the U.S., the worse it absolutely gets. Like, take, for example, Charles Schwab. Take, for example, Deutsche Bank. Deutsche Bank having terrible outlook for the next quarter, saying that they're having tons of problems, losses. I think they're down like 6, almost 7% today. What happens if they don't cut rates in July? Right? That's another month where they have to kind of bite down and see if they could survive to the next. It's not getting easier for these banks either. So it's going to get to a point where I think the fire sale will happen, and it's going to just be to the point where people are going to undercut each other. Like I said, for 30,000, the banks are probably going to be less likely to loan out that money, even if rates are coming down because they're trying to save the economy. You're more likely to see a lot of people who are I'm not going to say smarter, but smart to have cash on hand in order to buy up some of these homes, because I do think that it's going to be an absolute steal for a lot of people. But that being said, a lot of institutions that also have capital on hand, maybe that's what they're waiting to do, right? Maybe they're looking to buy up some more homes and property and then flip it, kind of like how they did in 2008 all the way to 2021, 2022.
Good to see you, Chris. Thanks for joining us. As we begin to wrap it up, I know you're not going to be here on Friday, but we have a few big days of data left this week. We have Q2 GDP, the first reading tomorrow. The expectation has been moved up to 2.1%. So don't love that for the markets. And then on Friday, we have personal income, personal spending, PCE, core PCE. The expectation for the headline is 2.5% year over year, and for core 2.6%. The 2.5 would be a move down on the headline number by 0.1%, and the 2.6 on core would be flat month over month. So I'm curious what you're expecting to see there and how you believe the markets are going to react based around, whether it's down, up, flat. What are your expectations there?
I think, man, it's so hard for me because I'm using narratives and I'm using the market itself, and I'm trying to see how the data will impact that, or how the data will be used to impact the markets. I think in my heart, I do think we're going to get a bit of a quick rally bounce to short squeeze the market, regardless of whatever the data says. But I do think that data is going to come to haunt the market really bad in August, September. I don't think the data is going to be great. I think it's going to show that the economy is slowing down. But, after seeing what happened today in this market, if you're not getting any bids here on the 50 moving average, that kind of concerns me that it's going to be worse than I expect, right?
So here's a weird one. I'm looking at the expectations for everything on Friday. The estimated number for personal income is a decrease from 0.5% to 0.4%. And for spending, an increase from 0.2% to 0.3%. So make sense to me. I guess I can just rationalize it as most people don't manage their money well, so they're just going to spend more than they make. So that's kind of how I would view that one. But I saw that, I was like, that's kind of weird.
It's very weird.
And pretty ass backwards as far as like how I would be handling the situation.
Yeah, man. It's I don't think they're going to cut rates in July. I think they're going to do it in September, but it's going to be kind of a forced move in September. It just doesn't make sense to me right now. Or I mean, it doesn't. That data that you just mentioned, the expectations doesn't necessarily make a lot of sense. I think again, we're going to see a lot of revisions in the months to come on a lot of this data that it's very critical right now. But I do think that we are going to see a slowing of spending of the consumer, just weakening. The GDP, I think, is going to be way more important than people really anticipate. Because again, all it takes is 2 negative quarters of GDP growth, and maybe this is showing, hey, this is slowing down. So maybe the next one might get a negative, or it could be, 2 quarters from now, negative and a negative, and we realize that we were in a recession. So I think this is going to be foretelling the future of the U.S. economy. But I do think that we could see markets just be absolutely irrational just for 2 more days into the weekend. And then you see something like limit down Monday if it is really bad and things are starting to hit the fan. I just don't necessarily know how long some of these people that are in their positions that are absolutely hurting can hold those positions without there being the fire sale, like we said, with homeowners, with some of the banks, some of the larger institutions. At some point, something's going to give, and they can have to sell before the next guy sells, especially if the data is showing that we're not going to hit these earnings for the next 2-3 quarters or so.
Yeah, I'm looking at the CME futures for rate probabilities, and for the July meeting, they have it as 93% that there won't be any rate cut. But then I look at September, and they don't even have it as a possibility that the rates will be the same once again as they are right now. So like if that inflation data comes in and it's a hot reading, the markets are going to fucking tank, because right now all the expectation, there's a 100% belief that there will be at least a 25 basis point cut come the September meeting, and that could be really scary if the data comes in and the market is not ready for it.
Well, it's kind of forcing a crash, is it not? Right? You're not opening up any type of pressure relief for the markets whatsoever. So if they continue keep hoping and hoping and hoping, it's the point where people are just exhausted, and there's no real debt that's being created in the system. You can't really throw more debt into the system to make that money. Perfect example of that would have been 2020 to 2021 when rates were practically zero. Pulling this up right now, this is the 10 to 2 year. It went as low, it got inverted, and now we're getting closer and closer to reinvert, uninverting and being positive on the 10 to 2 year. We're at a key level of resistance right here. If the data continues to show that the treasury market is pricing in a recession, you're going to be up here, and you're going to start to see a lot of people take advantage of the treasury market. That's why I think it's so dangerous up here, having the rates so high, but at the same time seeing the equity market there's been a pullback, but still relatively high to where it was in October of 2023. You're going to start to see a lot of people pile in if no one's buying into this market. If you're not getting any bids, you're going to crash the equity market to save the treasury market. Japan, that's pretty much their base case at this point to save the yen, right? They're going to sell off US debt in order to save their currency. So this is right where it's going to get really interesting. The PC data and the rate cut probabilities are going to impact definitely the equity market, but it might actually save the treasury market in the long term, which might be the best thing possible for us post recession, right? We definitely need to get the 10-year and the 2-year yield under control. Still such a great fucking deal, if you ask me. I'm looking at some of these rates on it. People are saying, oh, it's 4%, it's not good. It's like, it's better than negative 36%, asshole. Like, you kind of have to have that type of mentality right now. And it's like, yeah, 1 month, 5.34%. Obviously, if you're lucky to get 12 months of that, sweet. I don't think that is. 4.8%, great. 4.4%, not bad. 5 years, 4.1%. Even if you want to look to the 30-year, it's 4.5%. So there's definitely value across the board if you want to lock in some capital, which I'm sure people will do on the shorter end of the curve in the future. Right now, they just don't feel the need to. The equity market will kind of force people, I think, into that point where it's like, well, yeah, I need to make some money. I want to be able to buy the dip, but I don't want to have my money locked up that long. 1 year, 4.8%, not a bad deal. I'll still be able to buy Tesla when it's $64. Again, I'm just using hyperbole and examples of things that we've talked about. But yeah, like there's a lot of signs that things aren't getting better. They're getting worse. And, I think the panic really is going to start to set in. We already see fear taking over in the equity market on the fear and greed index. Kind of a bullshit indicator, but at the same time, I don't think people are fearful enough for what could happen in the markets. It could be an absolute giga nuke, to the point where, we're down at 3,500 in a matter of 4 or 5 months.
All right. That is how we're going to wrap it up on that bright, cheery note for you. Thank you, everybody, for joining us. If you have not yet, like, subscribe, comment, all of that jazz. I'll be back on Friday for a little episode with our good friend, Mr. House, going over the PCE data, the GDP data, and how the markets are doing. Should be, if you were taking some of the summer off for a little bit, I think the time is now to get back into it. Time to lock in, because things are about to get interesting in the months ahead.
Man, everything's gonna fucking be all right, I guess. Keyword there. Tonight also, we will say this tonight, big news regarding political stuff, and just a lot of political uncertainty too. That's going to impact the markets. This is just like if you're not political and you just care about the markets, this is the most fun time to be alive, because pretty much you don't know where this thing's going to go. We have a good idea, but this could be a very fun end of the summer.
No one knows anymore. No one knows anything. All right, that's going to do it. Thanks, everybody, for joining us. Have a great rest of your day. Stay safe out there, and we'll see you next time.
Take care, everyone.